What's up, everybody? Jonathan Rose, owner, Masters in Trading. Let me walk you through a trade that I'm doing right now. Beyond Meat, $233. This company IPO'd at $25. Most of you are probably aware. Went up to 50, 150. The whole world is short. There's a massive short squeeze going on. We've stayed out for a long time, but now it's just getting a little too ridiculous. So now I'm going to jump in. I'm not sure it's a trade that I'm going to suggest for others because it's very expensive, but the reason that I like it is, for one, when something trades just at an absolutely ridiculous valuation, shorts get squeezed and it inevitably comes down, and when it comes down really, really quick. It wasn't too long ago that Tilray did the exact same thing. Tilray came out at 20, went all the way up to $300. Everybody says the valuation was absolutely ridiculous, but it was a short squeeze, and the valuation was ridiculous right here, but short squeeze, came right back down, had lots of volatility, or it was a really good trade. But you need to understand that the underwriters brought the stock public at $25. If the underwriters thought Beyond Meat was a $10 billion valuation company, they wouldn't have put it out at $235. They would have brought it public at like $150. Right now, this is a $15 billion valuation. So let's compare it. Beyond Meat, $13 billion. Shake Shack, Wendy's, Jack in the Box, Red Robin, all of these different companies pale in comparison to the big bad Beyond Meat. It's not sustainable. Now, sure, Beyond Meat is inevitably going to trade down. It's inevitably going to be trading under conservatively $150. I think it inevitably trades down to $50, even lower. But it's all about time. And I was just talking to my coaching clients about this. Sure, I'd love to be in the trade for 3 years, but it's really freaking expensive. It's a $235 stock. Beyond Meat does have their lockup in September. That should drag the stock down. But this Monday after the close, Beyond Meat, it's time to talk to some analysts. It's time to open their books. Last time, Beyond Meat announced $80 million in sales. $80 million in sales, and it's got a $14 billion market cap. Doesn't really make sense. Instead of going out to September because it's just too freaking expensive, the trade that I've been doing is buying these 160s. Stock's at 235. Stock's at 235. The thinking is the 160s, for one, it's just too expensive to play up here. The 160s are okay, but what I really like is all this SKEW down here. SKEW is expensive options when puts are more expensive than calls, or calls are more expensive than puts. It's called SKEW. And so because somebody's bidding $1 for these 130s, that's $106 lower, but it's $1. There's a good likelihood that the stock gets down here. A great way to see the probability of a position coming in the money, use delta. It's a great way to use delta. So my 160s right here, the market, the implied volatility in the market is pricing a 9% chance that Beyond Meat gets under 160 within 21 days. So that's how you can use delta. So the market is pricing in almost a 10% chance that this stock could be down 100 points in 21 days. In order for that to happen, we would need a significant catalyst. The significant catalyst is going to be those earnings that are released for the first time after the close this Monday. That's why I'm in Beyond Meat. Not sure it's a great trade for everybody because it's expensive, but this trade is a great trade for everybody. And this trade, we would want to do millions and millions and millions of times if the market allowed us. Here's what that trade is. I shared the trade in my coaching room. Buying 82 halves and selling 80s. Look at the options chain in Beyond. If given these prices, how many of the 82.5, 80 put spread would you be willing to do? Then I asked everybody, what's your risk? What's your reward? Right away, Vince nails it. If I put on a debit spread and I pay 15 cents, which would be a debit for the long, and then I sell these for 15 cents, which is a credit, you have zero risk. What's your reward? Your reward, if the stock gets under 80 by expiration, 21 days, very tall order, not a high probability, but you have $0 of risk and you could make $2,500 on a 10 lot. The difference between the strikes, 82.5 minus 80, 2.5, 10 lot, $2,500. But obviously that trade is not so easy for everybody to find. That trade's gone now. 15 cents, sell 15 cents. Right now you can buy these for 20 cents, sell these for 10 cents. You can't really do that trade anymore, but keep your eyes open. The market will show you real edge like that. It doesn't happen all the time, but in these high-flying stocks, hey, how many would you do? Millions, right? You have zero risk. Your upside is $2,500 per 10 lot. Can Beyond Meat trade under 80 within 21 days? It's trading 236. If you think about it like that, it doesn't sound very likely. But if I tell you that a stock is going to IPO at 25, 60 days later, do you think it could trade under 80? You'd probably be thinking, yeah. So 150 to 230 or whatever, it's all nonsense. It's all fluff. It's all short squeeze. That's going to come out real fast, just like Tilray did. I like the trade. Taking a shot, high risk, but I kind of think my probability for success is higher than that 10% that the market is pricing in. I feel good about it. I thought I'd share. Hope you enjoyed that. My name is Jonathan Rose. I'm the owner of Masters in Trading.